Now, guys, Aussies are actually going to extreme lengths to get into property at the moment. Affordability is cooked, and a lot of people are saying that the market must fall back, it must go backwards, it must crash, and prices will become more affordable. But that is not going to happen. And I want to break down a few key stats for you today. These are important stats. If you're looking to get into the market, you're looking for certainty in the market, you're wondering where the market will go, I'm going to give you 4 to 5 really important data points in this video, so stick with me until the end. Hey everyone, Scott Kuru here with another daily property update, just here getting fitted for some new golf clubs. And guys, make sure, hit the like button, hit the subscribe button so that you can get your property update every single day so that you can be a property insider. Let's improve your wealth position, guys. So guys, yeah, affordability is cooked. Let's just say it how it is. Housing is the most unaffordable it has ever been in Australia. Debt is at record highs. House prices are now more than 8 times incomes, and rents are taking up a record share of what people earn. So you'd think with numbers like that, the market has to collapse, but it won't. Property is so powerful in this country that Aussies are borrowing more. They're getting help from parents, a record number of parents, the bank of mum and dad stepping in, and even the government is coming in with incentives to help people purchase property. Stick with me and I'll show you why debt and affordability aren't signs of weakness. The proof that the property market is unbreakable. Now, I want to talk a little bit about our debt story. We do need to have a little bit of a look back in time. Let's go back to 1991. This is when household debt was only about 70% of income. Today, it's 182% of income. Now, a lot of people, and you hear this in the media, will say that this is a sign of danger, but actually, this is a sign of commitment. Aussies are willing to carry more debt because they know property pays them back in the long run. We don't take on that kind of leverage for anything else, not shares, not crypto, not business, just property. That tells you everything you need to know. Now, affordability is at record highs. In the early 90s, the average home cost about 3 times household income. Today, it's more than 8 times income. That's the highest on record. And yet, people are still lining up at auctions. Why is this, guys? Because property is the one investment Aussies trust. Families know if they can get into the market, they'll be set up for life. That's why CoreLogic shows values are up 39% in the last 5 years alone, adding $230,000 to the median house price. Now, the ABS just confirmed the average home price has now cracked $1 million for the first time. Property just keeps pushing higher. Home ownership rates are falling, but wealth is rising. Now, here's the interesting thing, guys. Home ownership has actually dropped since 1991. Fewer younger Aussies own homes today than what their parents did. And yet, Australia has just been ranked the 2nd wealthiest country in the world. Why? Because people who do own property have seen their wealth skyrocket. 1 in 10 Aussies is already a millionaire in US dollar terms, and it's housing that's got them there. So what does that tell you? If you want to get ahead in Australia, you've got to get on the property ladder. This is not an option. Now, guys, first-time buyers and investors are piling into the market. The proof is in the lending data. The ABS shows that in the most recent quarter, first-time buyer loans rose 1.7%, with the value of those loans up almost 6%. Investor loans jumped even more, up 3.5% in total numbers. So even under all of this so-called stress, more Aussies are entering the market. Why? Because they know the longer you wait, the more expensive it gets. And investors are back in force too. They understand property just isn't shelter, it's an investment instrument. You can hold it in super, you can hold it in your personal name in a trust, you can leverage it with the bank, and you can use it to create generational wealth. Now let's talk about the family bank. The bank of mum and dad is booming. According to the latest surveys, nearly half of all Aussie parents have helped their kids financially in the past year, and one of the most common reasons to buy a house. The average handout is $112,000 nationally, with parents in Sydney dropping over $200K to get their kids into the market. And here's the kicker. Most parents don't even expect to get that money back. Why? Because they know the safest place to put family wealth is into property. That tells you everything. Even parents are willing to hand over life savings because they know housing is the one thing that never lets you down. Why is this good for investors, guys? So now let me spell it out for you. High debt levels, record affordability squeeze, these aren't signs of weakness. They're signs of strength. They prove that Aussies will do whatever it takes to own property and stay in their properties. And it's not just households. The banks are all in. The government is all in. Property is the foundation of our financial system. That's even during the GFC, even during COVID. The market dipped briefly, then roared back stronger because Australia will never let housing fail. So here's the truth. Debt is high. Affordability is stretched, but instead of slowing down, Aussies are borrowing more. Parents are pitching in, investors are piling in, and the government is pushing every button to keep the market strong. That's why property is the safest, strongest investment you can make in this country. Guys, again, make sure to hit the like button and hit subscribe so you can get your daily property updates so that you can navigate your way to financial freedom and get all the information you need to be a property insider. Take care, everyone.